What's up, YouTube? So today we're going to talk about joining into a trend. Now, I know the easiest or the most comfortable thing is joining into the beginning of a new trend. For a lot of people, we all like catching those reversals. It can be a little bit scary to jump in to an existing trend. So today I'm going to show you a very simple price action and market structure strategy that you can use to join into an existing trend. Of course, we're going to juice it up a little bit with a bit of order flow via the cumulative delta. I'm going to show you this two instances of this setup that occurred today. The first one's a good one. The second one I avoided, and we're going to talk about why I avoided it, how I, quote, knew, or how I suspected that it wouldn't have been a good one to take. I'm also going to show you one other setup that occurred in between. It's another different setup from my playbook. It's a support and resistance bounce, but would have also allowed us to join into this morning's downtrend. So all three of the trades I'm going to show are from this morning. Today is September 21st, 2023. Very simple stuff. Let's jump over to the charts and take a look. Okay, guys, so here we are at the charts. This is from today, September 21st, 2023. And what's important if we're trying to join a trend is that we have a really good sense of the bigger picture. Okay, we want to have a sense of what's going on higher time frames. So I always use 3 time frames. I use the 50,000 tick as my high time frame, the 10,000 tick as my medium time frame, and the 2,000 tick as my low time frame. And I prefer tick charts, but you could easily do these same things with time-based charts for day trading. This is S&P futures, by the way. If I was using time-based charts, I would probably be using the hourly, the 15 or the 5-minute, depending on how the market's moving, and then the 1 or 2 minute for my entries. Okay, well, let's take a look at this. This is the 50,000 tick. So what we use the larger time frame for is direction and context. So what we see right now is that the market is very clearly in a downtrend. Big thing here is that we're clearly making, lower highs, lower lows, and price is quite extended here. So we want to be careful about jumping into this, but until we see signs of buyers coming in and the trend reversing on a lower time frame, we're going to stick with this higher time frame bearish bias. Okay, now let's jump over to our middle time frame, which I use the 10,000 tick chart. And what I want to point out here is at first, it looks like there's not really any structure in here to go off of, which we don't necessarily need for this trade. But I did notice after the fact, I actually didn't see this while I was trading this morning, but you do have this little base in here, right? This like drop, base, drop. And this little red dot, that is the Ninja Trader large trade detector. So within that base, we had some volume come in. It's probably not anything really major. And again, I didn't even note that when I was trading this morning. But you can see on the volume profile that there is this little volume bump right in here. And that's certainly something to be aware of. The other thing, well, I suppose I can leave that rectangle on there for now for reference, is although I normally do use the tick-based charts, if you do take a look at this on a 15-minute, which is this chart right here, you can see this little base inside of here as well. It's actually a little bit clearer on this 15-minute. So we can clean that up where you can actually see this swing low, and we'll see that on the lower time frame as well. So we do have that little tiny bit of structure there, but we don't necessarily need that for this trade. The main thing on the middle time frame here, the 10,000 tick, is that we are also very clearly bearish. So we're making lower highs, lower lows. So that's the very first criteria that we have for this setup, is that we want our higher time frame and our middle time frame, our intermediate time frame, to be matching trends. So again, the 50,000 tick here, clearly bearish. The 10,000 tick here, clearly bearish. Okay, both are showing lower highs and lower lows. Lower lows, yeah. Excuse me, lower highs and lower lows. Sorry about that, guys. So the next criteria that we want is going to be going down to our low time frame. This is our entry time frame. So for me, this is the 2,000 tick chart. And what we want here is that the low time frame is prior to setting up is actually in the opposite trend. So we can see here that this time frame is making, this higher low here, and then ultimately higher high, and then higher low, and higher high, right? So we can see this stuff setting up, okay? So the high time frame and intermediate time frame are matching trends, and the low time frame initially we want to be trending against those, because this is essentially the pullback of that intermediate time frame, and we want the pullback to be enough of a pullback that it's actually showing those actually showing a trend in the opposite direction. Now, one other thing that I want to note about this particular setup is it's a little bit of a double setup here, and that's going to affect how I took the entry, but I'm going to show you the traditional entry here. But what I want to note here is that we have this little swing high here and then another bounce off of it here. Those two touches make this a valid support and resistance level for me. Now, normally when I take a support and resistance play like this, I like the levels to be visible on one time frame up at least. This one like kind of is. You can see this little, on this wick here, but it's not like a super clean support and resistance play, but it was valid, which affected my entry a little bit. And I'll show you what I mean. So criteria 1, high time frame and intermediate time frame are trending in the same direction. Criteria 2, the lower time frame is trending counter to those higher time frames. And all we're waiting for here is for structure to break on the lower time frame. So the last valid structure we have here is this very, very small swing low here that led to this swing high. This one we don't totally count because it didn't lead to a new swing high yet. So if this comes down and breaks this structure, that's where we can enter as long as we have a lower high. So if this comes up higher and then slams down, we don't enter yet. We'll wait for the first lower high and then enter. So in this context, our entry, if this were to just continue from here, and I'm going to play this forward in a second, I'm not sure exactly how it continues, would be an entry here, our stop above there, okay? Let's play it forward a little bit and we'll see what happens. Now, the other thing I want to point out, and this is how we juice this up a little bit, guys. This is the really, really important stuff. What gives this trade a lot of confluence, and this is going to be important when we talk about the other setup of these that I showed that I did not take, is look at the delta from this swing high to this swing high and compare it to the cumulative delta there, okay? So notice we just broke into a higher high here on this time frame, but the delta is not confirming that move. So that tells us to be not super bullish here, and this gives us confluence for this setup. The other thing I want to point out is look at how the delta here is already slamming downwards, and we've already taken out the delta low of this swing here, right? So that little swing low we have circled on the delta is down here. And we've already taken that out on delta. So we're showing a lot of bearish delta here. Now the last thing, as we start to play this forward, is, again, look at how the delta is continuing to slam down, but also notice that right here, from this high to this high, these little teeny highs here, okay? Again, we're going to contrast this later. Notice on the delta, again, it's a lower high. So on this bigger swing, we have this divergence, and on this little kind of, you wouldn't even call this a double top, but we have the divergence there on that last push up, okay? So that's really important. Pairing that with how strong the sellers are slamming down into this, okay? That's what's going to give us a lot of confidence to take this trade. So as we push it forward, Makes one last attempt up. Notice the delta is just continuing to be very strong down. And right here is where we start to get our break. Okay, now again, pay attention to this right here, this delta. This is really important as we're pushing into this. So because we're breaking structure here, and we've made a lower high already as we do that, we have a valid entry right as we break that structure with our stop over that swing high. Okay, that's the entry right into there. Now, I do want to point one thing out here. That's kind of it for this setup. We're going to play it forward. You'll see how it plays out. But because we also have this support and resistance level that has both 1 and 2 touches at the same level, that also makes this a valid support and resistance breakout trade for me. I think I might have said bounce earlier. I meant breakout. And so for me, when I play those, I keep a much tighter stop. I would actually enter, if I see this kind of continue to come down, my entry would probably be a little bit later, but my stop would go right above my entry bar, and it would be something like that. Tighter stop, tighter target. But let's see how this plays out. We'll speed it forward. You see that would have already hit the tight target and then comes right down into the larger target. Okay, now that's the first setup. I'm going to leave this on here because what I want to show you is, and the reason that this is sort of an important level for our stop, as we continue to play this forward, you're going to see that price does ultimately swing back up here. Okay, so price comes right back up. So my tight entry would have already hit my target. I'd be fine. I'd be out of that trade. This one, almost not quite, but you're going to see that price does respect this swing and it's going to come back down. But this is actually the second trade that I wanted to show you guys. This is a different trade from my playbook. This is the support and resistance bounce trade. I'm just going to show it really quick because it's here. And then we're going to show another join the trend entry. Okay, but just to recap so far, we've got the 50,000 tick bearish. We've got the 10,000 tick bearish. The 2,000 tick was bullish, but had a lot of divergence on our delta. And then the moment that it broke structure, so it's joining the trend of the higher time frames. The lower time frame is joining in to the trend of the higher time frames. That's when we can take our entry. But now we have another setup. Let's say we missed that. Okay, this is a different setup than what I wanted to make the video about, but because it happens right here, I'm going to show it. As we come back up and retest this support and resistance level, what do we see? Okay, look at, again, the delta. Like right here, you know, last time we were, even right here, as we were bouncing off this level, even right here as we broke it, okay, let's take this one. So from here to here, okay, price is actually slightly up from the bottom of that candle where that candle closed. Let's look where the delta closed on that candle. It was right here. And notice, again, we have delta divergence. So that's one of the confluences that I look for when I take a support and resistance bounce trade. Okay, so now our entry, my entries are pretty much always the same. Okay, so right here, we start to see the delta break down along with the price action. That is how I like to take my entries. So what I'd be doing personally, I like a tight stop. I do my stop right above my entry candle, my trigger candle. We'll call it there. And then we'll watch how this plays out. Now notice my target, right, it ended up being exactly the same as from that initial trade. It just kissed it again, retraced. As this comes back down again, it's going to go and take out our target. And this move actually continued quite a bit farther. So you could have put a runner on this and trailed your stop down. Okay. So there's two ways to enter into the existing trend. This move ultimately ended up taking out this low down here, which if we had a runner, that would be our target. okay? But now I'm going to skip forward and I'm going to show you the second instance of a join the trend setup. But this one we did not take, and we're going to show why. All right, guys, so we're back. Same day. These are the trades we were just talking about up here. You can see how this really played out nicely. And now we have starting to set up another join the trend entry. But let's take a look at this one. So first criteria, larger time frame, 50,000 tick, clearly still in a downtrend. 10,000 tick, also still making lower highs and lower lows. So check off that first box. The large time frame and the intermediate time frame are in agreement with each other. Criteria number 2, we have the small time frame starting to make higher highs, higher lows, higher highs. So this is starting to be, it's kind of, depending on what size screen you're looking at. Wow. Let me show you what I mean here. So this is a higher high. Well, let me do this again. Let me show this a little bit more clearly. So we have higher high, higher low, higher high, okay? So our small time frame is in a trend that is counter to the first 2 time frames. So far, so good. We have those criteria met. But remember, I like to use my delta as confluence. So let's take a look at what's going on for a second with the delta. Now, first of all, the first thing that I notice is from this high, right, this last kind of base here before we fell down, notice we are lower in price, but this would be the delta here. We are much stronger in delta. So what that's telling us is that buyers are starting to get aggressive. They're really coming in. This alone should make us very cautious about wanting to continue to join the trend here. I'd really want to wait to see something a little bit more clear, or to see the sellers come back in and resolve this divergence a little bit. Okay, so that's number 1, is we have that divergence. Okay, let's keep going. Let's move this forward a little bit. Okay, so here we go. On this low time frame, we come up, boom, down, up. Now, a couple things here. This swing low is not a confirmed low, okay? This low never led to a higher high. So even though we broke this structure, and we can be tempted to enter this trade right here, this was not a confirmed significant low. The last significant low was this one down here, because it is the last low that produced a higher high. So that's number 1, right? We don't really have a good, clean setup here. The other thing that I want to point out, that I want to contrast against the earlier trade. Let's go back here for a second. Remember this first one where we made this swing high on price, but our delta was making a swing low, or making a lower high, right? So we made a higher high on price and a lower high on delta right here, just these micro highs on this small time frame. Look at this one. We made a lower high on price, okay? A lower high on price. We broke this low. And look at our delta. It's subtle, but the delta from this high to that lower high, the delta's up, even though we made a lower high on price, okay? So again, the buyers are strong here. That should give us some pause here. That should make us really, really uncomfortable with entering this trade. Now, if you look at this on the 10,000 tick, you can also very much see this little swing high here compared to there. That's the same thing that we're seeing right here on the 2000 tick. Okay, so the two reasons that we would have not joined here is reason number one, this is not a confirmed structural low, right? If we want to be very picky about our market structure, this is not really an important low yet. We're still just retracing into this bigger move. And then on top of that, the delta is very strong. While we made this lower high, the delta is making a higher high. So let's take a look at how this plays out. There we go. So we can see price very much just blasted right through this stop, took out this high, made a new higher high. This becomes an important structural low because it made a new higher high. This one was not. So those are the things that you want to look out for to avoid. So we could have avoided this one just based on our knowledge of market structure. We did not break a significant low here, but the delta also gave us some important clues here. When we look at this, even on the intermediate time frame, look how strong this delta is coming in. So this is telling us that buyers are here, and we should be very cautious about shorts at the moment. Now, that doesn't mean that I'm not going to take more shorts today. It just means I'm not going to take more shorts right now. I want to see some strong sellers come back into the market before I take another short. So that's it for today, guys. I hope you found this video helpful. Very straightforward strategy that you can use right away to join into an existing trade. Again, all we're looking for is our high time frame and our intermediate time frame to be matching, to be showing the same trend. We want the small time frame, which will be our entry chart, to be trending in the opposite direction. And then once that small time frame breaks structure and shows the first either lower high or higher low, basically rejoining the larger trend, that's where we can take our entry. But if you throw in a little bit of cumulative delta, you get added confidence to take these trades, or sometimes a little bit of caution for when to stay out. I'll catch you in the next video, guys. Follow your rules and trade smart.